Ankur, we'll talk about few of your misses, and I guess that's where the biggest learnings have been. Would love for you to talk about one or two misses, and what was the learnings from it. Meaning, a deal
My
that you have had access to, you passed it, and the deal ended up becoming massive down the road.
Oh, okay. Yeah, no, I'll go with my anti portfolio for sure without naming them. And in hindsight, frankly, I don't regret losing them while I would have made a lot of money because back then I was convinced I don't want to do it. And I don't think there is anything in hindsight that I could have known more to know that this worked out. So the classic case, Shiva, for me is the ones that have gone on to become crazy successes are quote unquote successes for investors. I would argue that they're not yet a success for the company or for the customer. And that's a big dissociation that people ought to understand and make. That what may be a success for an investor needn't be the success of the business principle. My definition of a business success is something that's profitable, something that continues to grow, and something that consumers would love to see in the future as well. The definition of an investor success is we came in at X, we went at Y, and Y is greater than X. For all you know, they couldn't care less about how the business is doing. They couldn't care less about whether the consumers are happy or not. They, in fact, couldn't care less whether the NPS even makes sense or not. If they've made their money, they have done their fiduciary responsibility towards their LPs, and that works for them. So I say this, which is not something that a lot of investors say, is that investors are not in the business of making your business work. Investors are in the business of entering and exiting businesses. And you ought to look at them that. That doesn't make them evil people. They're still doing good work for the ones that they have promised. Yeah. But you need to recognize that because an investor has come onto your cap table, they will one day exit because that's how they get their money back. And that you hope will happen on favorable terms, but it could very well not be on favorable terms. That still will make them the right professionals to have done. And it is your responsibility as a founder to understand that very well. So whenever I think about my anti-portfolio, it's almost always, while not 100%, but almost always been the case where I didn't want to be part of a trend and make that buck from an investor perspective. I wouldn't name those companies because that's being unfair to them. It seems to suggest those companies are not run well or are not doing well, but I have the deepest respect for what they're doing and their founders. But I do know that they are crazily valued. There is not as much value being created as it has been pegged on paper. And somebody made shitloads of money at that expense. And I could have very well done that as well. But I would still stick to what I said, that I'd love to back a company which I know is doing well for the problem that they're solving. And if that doesn't happen, there will be enough and more cases where I will leave a lot of money on the table, and I'm okay with it. And the big reason is because I don't think of angel investing as an investment asset for me. I have my very nice assets being built, whether it's crypto, whether it's mutual funds, whether it's stock picking, whether it's anything else. For me, investing in private companies or startups is just a way of giving back. And I love doing that because I get an opportunity to meet really smart people. Yeah. And while I've invested 20% of my net worth, that is my investment spread. 20% of my invested amount goes towards startups every year. It's not a trivial amount, but I, frankly, in my head, sign that off the minute I cut the check.